I sold all my stocks to put them into Bitcoin because when you look at the stock to flow chart, the number go up forever. Thank you guys so much for watching. I'll see you in the next one. Hey guys, my name is Evan and welcome to the Financial Dominance YouTube channel. In this video, I'm going to tell you why I sold out of all of my stocks, many really good companies with great futures where some have the potential to double, triple, and even quadruple over the next 5 years or so. And even with a portfolio full of multi-baggers, I still have a very strong case of why I believe Bitcoin will outperform all of those over the next 5 to 10 years. And in order to explain why exactly I think Bitcoin's going to continue to outperform anything else out there, it's important to understand just how big the total addressable market, or TAM, is for Bitcoin. Because most people just look at the chart and say, oh wow, look how high the price is. It's definitely gonna crash. Which I firmly believe it will crash, but they look at the price and they see an insane number like 50 or 60,000 and assume it can't possibly go higher. But what they fail to understand is that they should be looking at the market cap, which admittedly is also pretty insane. It's about 1 trillion, and for reference, there's other assets like Amazon or Tesla or Apple, Microsoft. A lot of the FANG stocks are in that ballpark of 1 trillion, 2 trillion. But see, that's just equity markets. And Bitcoin is actually disruptive to much bigger markets, such as store of value markets, such as gold, with a market cap of 10 trillion. And if Bitcoin disrupts gold, then we're looking at a $500,000 to a $600,000 Bitcoin. And I'll get to why that's possible in just a minute. But if you think that's a big jump in price, just look at the bond or fixed income market that has a market cap of 100 trillion. If Bitcoin disrupts the bond market, we're talking a 100x opportunity. That would be a $5 million Bitcoin. And yeah, I know that's pretty insane, but it's actually more realistic than it seems. So in order to understand why it's actually pretty realistic for the gold and bond markets to get somewhat liquidated and see large outflows into the Bitcoin market, it's important to understand a couple key concepts first and truly understand what makes Bitcoin a perfect store of value over the long term. Bitcoin is the hardest asset, meaning that there's no inflation in its total supply. And if you hold one Bitcoin of the total supply of 21 million in 10 years, you will still have one of 21 million. And that's something that's programmed into Bitcoin's code as opposed to fiat money that they can just print more of it. If you hold $10 today, that $10, you'll still have $10, but there's just going to be a lot more dollars. So that slice of $10 is actually worth less when compared to the pie of all the dollars in circulation. And another thing to note about Bitcoin scarcity is that over time there's actually going to be way less than 21 million because people are constantly losing their coins, forgetting their passwords, hard drives get destroyed, old computers get thrown away, and things like that are never recoverable. If you have Bitcoin on a hard drive and it gets thrown away and then that computer gets destroyed, then those Bitcoin are gone. But a scarce supply doesn't necessarily mean there will be demand. So just because something is scarce doesn't mean that the price will continue to go up. But there's many reasons to believe that the demand for Bitcoin will continue to rise, but I'll talk about that in a sec. So like I said, I think Bitcoin is going to realistically surpass gold's market cap. And gold's market cap is 10 trillion. And so let's just say maybe 2 trillion of that is the utility of gold itself in electronics and industrial stuff like that. So that leaves us with about 8 trillion in market cap that is used as the store value, which is the inflation hedge part of gold. Meaning when you get out of fiat and into gold, your purchasing power isn't continually melting away. But there's this large problem with gold, and it's that as the price goes up, the miners are incentivized to mine more. It's now more profitable for them to mine more gold, which then dilutes the previous supply of mined gold by about 2% every year. And it's been that way for many years, many decades. 2%, that's like every year you can guarantee 2% inflation of gold. And Bitcoin is better in this sense because Bitcoin has a current inflation rate of 1.7. And every 4 years that gets cut in half. So we just had a halving about a year ago. So that means in 3 years from now, the incoming supply will be cut in half. The block reward for mining gets cut in half. And then another 4 years after that, the block reward will get cut in half again, and so on and so forth every 4 years. So basically Bitcoin is getting programmatically more and more scarce every 4 years, and this is what causes the prices to skyrocket after every halving. And since the new supply gets cut in half, assuming demand stays the same or increases, if we know anything about supply and demand, that means there's nowhere for the price to go but up. And that's why when you look at the Bitcoin charts, when it goes parabolic, that's usually what happens after a halving. So with all that said about gold, if the store of value utility for gold is about 8 or 9 trillion in market cap, and Bitcoin is a better store of value because its dilution is quickly approaching 0% inflation per year, and you can send it through your phone or computer instantly and can store it safely digitally, then I just don't see any realistic reason why gold is a better store of value and more deserving of a higher market cap than the digital version. It's almost like Satoshi Nakamoto designed gold, but just better digitally. So by all these metrics alone, I believe that Bitcoin is pretty much undervalued by about 10 or 15 times. I know, it's crazy, but Bitcoin should be in the hundreds of thousands right now. It has all the properties of gold. It has better properties than gold. It has a scarcity now that's currently less than gold and will be even less than that of gold's in the future. So if everything about it is better, why shouldn't it be a higher market cap? It just makes sense. It just makes investment sense. And now this leads me to why Bitcoin is better than bonds. Bonds are a $100 trillion market cap that I believe is in a bubble. And so now I'll tell you why I think Bitcoin will slowly chip away at the market cap of $100 trillion worth of bonds. So basically companies keep issuing debt and people keep buying it up as the safe thing to do. And they're kind of like dividend stocks, but worse. They get paid a premium of about 1 or 2%, whatever the coupon rate is, and they get paid that annually for lending the company money. Sounds safe enough, right? That's why pension funds, insurance companies, and other financial institutions buy bonds. Even governments, like our government, buys bonds, and it's like, where's that money come from? They're literally just pumping printed money into a market. Like, could you imagine if the government was like, hey, we're just going to print money and pump it into Tesla stock? Like, it would just go up infinitely. Because it's a bubble. It's just fake money, just pumping it up and pumping that market cap up. But the reason companies do this, pension funds do this, is because it's the easy thing to tell your customers, like, oh yeah, your money is invested safely in bonds, so they won't go up or down much, but you'll get paid a couple % per year. Like, that's an easy sell. Like, if somebody's older, they got a lot of money, it's easy to sell them on bonds. But what they're not realizing is the monetary supply is being expanded by upwards of 15% annually, and 40% of all the new USD was created in just the last year. They basically took your money and almost cut it in half. If you have cash, it's literally just getting devalued, and it will buy less and less and less as time goes on. And that's nothing new. We already knew about inflation, but the thing is the inflation rate is being ramped up and ramped up and ramped up, and it's not slowing down. So basically, if your money is like staying the same, like bonds don't really fluctuate much. They pretty much stay pretty flat. And if you're only getting like a 2% yield, but the government printed 15% more money, that's a negative 13 real yield. You lost money. And negative 13% over 5 years, that cuts your money in half. That's literally the most upside down trade you could ever possibly do. And this is actually exactly why Bitcoin bought Tesla. I mean, Tesla bought Bitcoin because they had 1.5 billion in cash that they won't need for a while. So instead of buying bonds like companies normally do, they looked at the facts and they bought Bitcoin. So that 1.5 billion in a few years will probably be about 3 or 4 billion. And it's not necessarily that the Bitcoin went up as much as the dollars went down in value. So now it takes a higher number of dollars to buy the same amount of Bitcoin because the dollars are worth less. And the Bitcoin is worth more because the dollars are worth less. I hope I made that clear enough, because that is like, if you take away anything from this video, that's the most important thing to take away. That's very important. So I hope I made that clear enough. And this is actually why I sold my stocks. Because if you actually find a company that can beat that hurdle rate of printing 15%, if you can actually find a company that can do that and expand their profits by 15%, then you still have the execution risk of whether they can sustain that or not. So basically, in order to buy stocks and be confident in it, you have to know that, okay, who's going to win? The money printer at 15% a year, or is that company that you put your money into, are they expanding their bottom line, their earnings, by 15% a year? Because if they're not expanding their bottom line by 15%, then you're getting a negative real return on that money. Or you could just get your money out of the fiat-based system altogether like Tesla and convert your Bitcoin back to fiat when the printer slows down to where the hurdle rate isn't so high. But I also have my doubts that the printing press will slow down, because when you print more money, you generally have to keep exponentially printing more, or you have to raise taxes, but no politician is going to want to do that, because you could see in 2018, this is what happens when you raise rates. Kind of hard to get reelected as a politician when you destroy everybody's retirement. Plus, now it's really popular politically to just give everybody free money, so that sucks for the dollar, but I mean, hey, it's bullish for Bitcoin. Think of it like this. You have a pool. You throw a cinder block at the bottom of that pool, and you throw an inflated beach ball into that pool, and you start filling up the pool. The water that's filling the pool is inflation. That's the government printing more and more money. And the cinder block is the value of your dollar or your stock that isn't beating the hurdle rate of 15%. You're underwater. But if you just take it out of the USD system, like, there's no CEO of Bitcoin. There's no execution risk for Bitcoin. If Bitcoin can't miss earnings. Bitcoin doesn't have competition. Bitcoin doesn't have to execute on anything. Bitcoin is a protocol that was written like 10 years ago, and it's just every day it executes. It executes code, and it will, like it has been for the past 10 years. Every 10 minutes, pumps out a block. Every 10 minutes, pumps out a block. And it's this sound money system. There is no adding to the supply. There is only taking away from the supply through people losing their coins. But yeah, back to my pool metaphor. If the money keeps getting cranked and printed, I would rather have the beach ball that just floats along the top, where I can just take my beach ball at the same water level. It's falling apart now. But if you take your money out of the USD system at any time, it will have grown by the inverse of what they printed. It will grow at the same rate they printed. If they print 15% a year, your Bitcoin, over long spans of time, it's volatile in the meantime, but over time, Bitcoin grows by how much they print. So before we get to the risks, that's why I like Bitcoin a lot. It's a two-pronged approach. Not only is Bitcoin gaining relative to the printing of USD, which is a guaranteed 15% rate of return, but it's also going to gain based on the amount of increased demand flowing in out of impaired assets like the $100 trillion negative yielding bonds. You have to be insane to buy bonds. So let's talk about some of the risks. The main one every person says is, oh yeah, the governments will never allow it, which is always pretty ironic to me, because that's like saying that Bitcoin is going to get so big that it threatens all the world's currency, which is like tens of trillions of dollars. So it's like openly admitting that Bitcoin's going to go to the moon and is not supposed to make me want to buy more. As scary as it is for somebody to say that governments will ban it, people don't realize that governments are made of individual people. It's not just some big blob that spits out laws and rules and regulations. Well, I guess some people in government are big blobs. But my point is that over the past few years, we've gotten a lot of pro-Bitcoiners in government, and if they're the ones that are making all the rules and regulations, I would say that's pretty bullish. Not to mention some of the top S&P 500 companies have large exposure to Bitcoin and is only going to get bigger by the day. So that means we now have people with deep pockets lobbying for pro-Bitcoin legislation. And also, if your government bans Bitcoin, you could just take your ledger to another country and just spend your money there. Or, you could probably even just use a VPN and make it look like you're in another country, sell your Bitcoin, and you're fine. To say you're going to ban Bitcoin, even if you ban the on and off ramps in a country, it's time to move to another country. There's competition for the money of your people. If you have poor legislation, you have poor laws, you're pushing people out of your country. And a lot of money going with it. So governments have a financial incentive to be friendly to Bitcoin, because if they're not, and it actually helps the countries they're competing with, as well as just boosting the popularity of Bitcoin. For example, when Nigeria banned Bitcoin, the people started to buy it like crazy, so much that the price in Nigeria went up to something like 85,000. So I don't know, there's so much FUD out there about banning Bitcoin, but it's like, if you actually put any sort of pressure on, okay, well, tell me how you would ban Bitcoin, like, the argument just really falls apart. There's all sorts of holes in that one. There's the energy, but it's like, there's stuff that just came out that it's like proving that it's like all green energy. Not all, but majority green energy, and incentivizes green energy. And as far as a hack goes, it's like, how are you going to hack thousands of computers worldwide? Like, there's no central point. That's the point of it being decentralized. Like, I've studied this for like 5 months now, like tirelessly. Like, I've watched so many days worth of video content and podcasts, and I just have yet to find one good argument why Bitcoin won't be massive in the next 10 years. If you are interested in buying Bitcoin, like, stay away from margin. That's like the real threat. That's realer than any Bitcoin ban. If this wicks down like 10, 20, 30%, like, you're getting margin called like instant. I mean, this stuff moves fast. So in summary, that was a lot of information. I'm just going to put a bow on the whole video for you here real quick as a quick takeaway. For the foreseeable future, I've decided to exclusively buy Bitcoin and hold Bitcoin due to the inability to find any diversified basket of stocks that will grow profits by at least 15% annually to outperform monetary expansion on a real basis. Combined with the outflows from gold and bonds into this, it just seems like the most promising investment as a store of value for the foreseeable future, as I don't see a real threat from any government bans either. So thank you guys so much for watching. If you're still here, that means you obviously want some more content. So I want to make sure to put some really good links in the pinned comments. And down there, I'm going to put any sort of super informative stuff that I just feel like anybody looking into Bitcoin should know about and should watch and should understand. So anyway, thank you guys so much for watching. I'll see you in the next one. Later.